Ladies and gentlemen, good day and welcome to the KOLTE PATIL Limited Q2 and H1 FY23 earnings conference call. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Shiv Mattu from Adfactors. Thank you, and over to you, sir.
Yeah, thank you, Melissa. Good evening, everyone, and thank you for joining us on the Q2 FY23 results conference call of KOLTE PATIL Developers Limited. We have with us today Rahul Talele, Group CEO, Dipti Rajput, Vice President Investor Relations, and Pawan Lohia, Head of Finance. Before we begin, I would like to state that some of the statements in today's discussion may be forward-looking in nature and may involve certain risks and uncertainties. A detailed statement in this regard is available on the Q2 and H1 FY23 results presentation that has been sent out earlier. I would now like to invite Mr. Rahul Talele to begin the proceedings of this call. Over to you, Rahul.
Thank you, Shiv. Good evening and very warm welcome to everyone present on this call. Thank you for joining us today to discuss the operating and financial performance of KOLTE PATIL Developers for Q2 and H1 FY23. I would like to begin by sharing with you our views and takeaways on the real estate environment, followed by a discussion on the second quarter performance and the way forward. Dipti will then take you through the key financial highlights, following which we will be happy to answer any questions that you may have. It is encouraging to observe the revival in the housing market across key geographies and demand segments. Despite the rise in mortgage rates, housing demand remains buoyant, with growing preference for leading real estate brands that have emerged stronger and are attracting a greater share of customer engagement. Strong balance sheets and access to liquidity is another differentiator supporting growth. This virtuous cycle has further accelerated over the recent past, with preference for larger homes based on emerging flexible hybrid work engagement offered by employers. Coming to the operating performance, during the first half of the financial year, we reported sales value of 812 crore, making a year-on-year growth of 20%. Corresponding sales volumes expanded by 9% to 1.17 million square feet. For Q2, sales value was 367 crore and volume stood at 0.56 million square feet. Importantly, realization continued to improve during H1 FY23, up by 10% year-on-year, driven by contribution from across projects. Strong execution capabilities demonstrated by our teams across projects translated into firm collection that improved in H1 by 34% year-on-year to rupees 878 crore. Q2 collections were higher by 8% year-on-year. Our business diversification strategy remains on track, with projects outside Pune contributing 27% of sales value during H1 FY23. While we see accelerating momentum on key operating aspects of the business in the second half of the year, Q2 has been slower due to some shifts in scheduled launch timelines that are likely to be announced over the next few weeks. Through the course of the rest of the current financial year. As indicated earlier, existing projects, our judicious business development initiatives and scheduled launches that have an aggregate top-line potential of approximately rupees 7,710 crore are on track. Over the years, we have outperformed in the second half compared to first, and we expect to continue on the same trend in FY23. Overall, we continue with the target of 25 to 30% sales value growth in the current financial year and are building traction from the medium and long-term perspective as well. Here, I would like to share that we have received all the required approvals for our residential project Sukh Niwas in Khar, Mumbai, and are ready to launch in coming days. For most of the priority launches mentioned in our presentation, that we have mentioned in our presentation, we have received most of the key approvals, including environmental clearance, and are in the final leg of receiving pending approvals. At KPTL, we believe prudent investment and strategic partnership have enabled us to deliver on our growth plans. In a recent development, company through its wholly owned subsidiary Sampada Realties Private Limited has entered into an agreement with Planet Smart City for strategic land monetization of a portion of its project Little Earth at KOLTE, Pune for rupees 78 crore for joint development of 0.65 million square feet. The agreement with Planet takes place through an SPV which is owned by Planet and KPTL in the ratio of 83% and 17% respectively. This said land parcel is a part of KPTL's recent acquisition of Sampada Realties that has residential development potential of 2.5 million square feet. This is the third project we have undertaken under our residential development platform with Planet Smart City, following the previously launched joint initiatives at Universe, at Life Republic and Three Jewels, both in Pune. In addition to further our business development agenda, we have received an approval from the board today for issuing redeemable non-convertible debentures on a private placement basis aggregating up to rupees 2006.5 crore. KPTL continues to benefit from the buoyant housing demand, especially in the post-RERA-led consolidation world. Strong brand recall, best-in-class living space, and strong execution capabilities position us well in our ability to drive growth, deliver on targets, and create long-term value. With that, I now hand over the proceedings of this call to Dipti, who is a new joinee as a IR head with us, to provide a financial overview.
Thank you, Rahul. Good evening, everybody. I will now briefly take you through our financial performance for the quarter and half year ended 30th September 2022. Based on the CCN-based accounting in Q2 FY23, we reported revenues of rupees 123 crore, and for H1 FY23, revenues stood at rupees 323 crore. Our EBITDA for the quarter and half year stood at rupees negative 0.6 crore and rupees 41.3 crore respectively. In the quarter, we reported a loss to the tune of rupees 8.8 crores, and for H1 FY23, our profit and after-tax post-minority interest stood at rupees 12.4 crores. Here, I would like to remind you that recognition of revenue and profits are dependent on the timing of the project completion based on statutory accounting guidelines. Our net debt to equity stands at 0.26 as on September 30th, 2022. The liquidity in our business operations remains strong. Operating cash flow for H1 23 stood at rupees 192 crores. We expect to report improved performance across operational and financial parameters for the remainder of the year. We remain committed to enhancing sales performance, timely execution, and generating strong cash flows, which will continue to drive PL performance over time. On that note, I conclude my opening remarks and request the moderator to open the line for Q&A.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may enter star and one on their touch-tone telephone. If your questions have been answered and you wish to withdraw yourself from the queue, you may enter star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, you may enter star and one. We have the first question from the line of Himanshu Upadhyay from O3 Capital. Please go ahead.
Yeah, hi. Good evening, Rahul. Am I audible?
Yes. Good evening, Himanshu.
Yeah. So I had a question on the sales performance. Okay. So see, we in last 4 years we see the business development. A lot of activity has happened. Nearly 8 million square feet of new projects we would have added. But in terms of launches, it has been pretty slow. Okay. We have come to a situation that whatever is ongoing and unsold, that is equivalent to only one half of saleable inventory, okay? And we had multiple projects to launch, okay, and we see delays in many of those projects. What could have we done better on launches, okay? And what is the urgency on that side? Because there is a window when you do a pretty good sales and traction, and we would be one of the very few real estate companies whose sales volume-wise is down YOY, and we peaked around Q3 FY22. After that, every quarter volume has been coming off for last 4 quarters. So any thoughts on that, or what went wrong and how are we improving the situation?
Thanks, Himanshu. See, because of the delay in the certain set of approvals, all planned launches of Q2 are getting postponed to Q3 and Q4. We have mentioned in our investor presentation as well, there are priority launches of around 7,700 crores worth potential. So out of these 13 launches, for 11 projects, we have already received the environment clearance, which is the most time consuming and key approval for the launch. And now the smaller approvals or local level approvals are in process. So though we accept that there is a delay in the launches, but we are confident at the same time that these projects will get launches in this financial year itself. Out of that, we are planning to launch a phase 1 of close to 4,000 odd crores, more than 4,000 odd crores. And yes, we do agree the sustenance inventory is depleting, and hence we are focusing on the priority launches, and these launches are certain now, and you will see the announcement very soon in next few weeks and next few months.
And what is the level of groundwork or preparation on the ground, means in terms of channel partners and everything? So if we are able to launch, because the festival season is in the 3rd quarter is already over, but in terms of traction and groundwork, how prepared are we that we can at least cross last year's benchmark and have some volume growth on that word? Any thoughts on that?
So Himanshu, see, we utilize this time positively to work on the back end of the operation. So let it be the readiness at the site in terms of the show flat or in terms of the marketing collaterals, having the meetings, discussions with the channel partners, giving the training sessions to the team, internal team as well as the extended team, as well as taking the advantage of the technology when we are talking about volumes. So we are well placed in most of the aspects to get the benefit of good launch momentum once we launch this project.
And see, this launches of 6,000 crores or nearly 7,000 crores we are expecting from Q3 of FY22, means the slide, okay? But do you think the prices have increased and we would have better margins in these projects, or you think the inflation would take away whatever margin improvement can be there in the launches what we had planned earlier?
So Himanshu, I'll try to answer into 2 parts. The first part is for all those projects which we have acquired like a Baner or Kivle or Tathawade, for this project or for that matter a Mumbai projects, whatever the price we have underwritten at the time of acquisition, so we are bettering in terms of the pricing over there. And particularly for our own land bank, so let me give you an example of Life Republic. So we have increased the price to the tune of 7 to 10% in last 1 year, and certainly we are confident that these projects will get launched at a premium rate as compared to a earlier sustenance inventory. So certainly that will add up to the volumes, add up to the better margins. And in terms of the commodity price impact, so we have already absorbed that price impact in all of our ongoing projects. For new projects, we are increasing our APR. Just to give you an example, Baner project we have underwritten at 7,500, and now we are planning to launch that at 8,500. And my cost impact is to the tune of 100 to 150 rupees for that project. So we are taking the advantage of the positivity in the industry, positivity in the customer's mind. At the same time, we are completely addressing the cost impact till date.
Okay, I'll join back in queue and hope we have a much better second half than what we've seen in the first half, at least on the sales side.
Yes, certainly. We are confident, Himanshu, on that.
Yeah, thank you.
Thank you. We have the next question from the line of Shreyans Mehta from Equirus. Please go ahead.
Thanks for the opportunity. Sir, my question pertains to, the guidance. We still continue to maintain the 25-30% growth guidance despite a muted 1H. So just wanted to understand, what is giving you the, the confidence. I agree that, we might be launching a couple of projects in the second half. But given, the way things are panning out, do you actually foresee that, we'll be able to achieve that? That's my first question. Second, in terms of the the slide wherein we have lined up the key priority launches, can you give some flavor as to the key big projects which you are targeting probably in third quarter and fourth quarter? And my last question pertains to the deal which we did with Planet Smart. So just wanted to understand the rationale behind doing this deal. Why are we not doing it on our own, and why are we going it via Planet Smart?
Okay. So, Shreyans, we are getting a good response in Q3, and we are confident that we'll get the same or rather better response in our all new launches. So, we are confident in terms of getting the volumes through new launches. See, though we have launched a very limited new inventory in last 2-3 quarters, but we could offload 30 to 45, 50% of the inventory in the launch quarter to, in the 3 to 6 months. So we are confident of achieving a better numbers, certainly in the second half of this financial year. Regarding the priority launches, see, out of this, we are confident that all these projects will get launched in next maximum, the outer limit is maximum 4 to 5 months, and the latest limit is next 15 days. So few projects will come in Q3 itself, and the spillover will be there in the early part of Q4. And to answer your third part of the question regarding the Planet Smart City, see, as a part of group, we strongly believe to achieve the financial closure as early as possible in the project. At the same time, it is not just a financial partnership, it is beyond that. So they are bringing a value in terms of some strategic tie-ups, in terms of some technology innovation. So we want to take advantage out of that. At the same time, we are getting a cash neutral point of view in the beginning of the project itself. So whatever from a cash flow perspective we have invested in the project, we are getting paid back through this deal. So IRR, on the other perspective, IRR for this deal will look significantly higher.
Got it. Sure. And can you just give some color on the structure? So right now, we would be doing 0.65, and the balance will also come via this, or probably, we would be doing it on our own?
So see, simultaneously, we are going to develop 2 projects. One project will be through Planet, and the other project, the rest of the part will be independent by KOLTE PATIL. So development will be simultaneous development, and the product offering will be a little different.
Got it. So, wouldn't be, I believe, wouldn't it be unfair because, we would be competing within our projects?
So, Shreyans, that is what I said. So the amenities and that kind of, the internal specifications for the Planet project will be different, and the subsequent phases that we are planning to launch on our own, the specification, the sizes will be different.
Got it. Sure. And my last just follow-up is, how would this the Planet Smart deal be? In terms of structure. So right now we have sold the land, and the land will move from our books to that JV, and the responsibility of the sales would be shared 50-50, or how will the economics work?
So economics is 83% of Planet and 17% of KOLTE PATIL. And the the sales will be, everything will be prorated distributed.
So 17% of top line or profitability?
17% of profit.
Okay. Got it. That's it from my side. Thank you and all the best.
Thank you. We have the next question from the line of Parikshit Kanpal from HDFC Securities. Please go ahead.
Hi Rahul congratulations on a decent performance. So I would assume that this first half sales is all largely sustenance sales, no major new launches.
Sorry, Parikshit, can you please repeat?
I was saying for this first half, we did not, this sales which we have done, this is largely all sustenance sales, right? I mean, no major new launches.
That's correct, Parikshit.
So second half, as we are planning to launch about, so this 4,000 which you said, so this you are going to bring in phases, or this will be like opened all together, put together cross-quarter?
So the total potential of my approved inventory will be 7,700 crores. Out of that, around 4,000 crores will be launched immediately.
So this will be launched and open for sale. So, you're saying close to about 4,000 crores will be open for sale. And typically during the period, how much sales we do during the launch period, how much we target? Is it like 25%, 30%? So how do we do before we increase the prices? So what is our target of like selling?
So let me try to explain. So for affordable and MIG product like a Life Republic, so over there we try to push maximum inventory during the first 6 months of the launch. So in the range of 40% to 60% inventory. And for the premium projects like maybe Baner, Pimpri Nilak, so our target is to achieve at least 30 to 40% inventory in first 3 to 4 months.
So that means in the second half, depending on the timing, so you could book anywhere from 1,500 to 2,000 crores of sales?
Yes.
If these launches happen, yeah. So incrementally, second half, you're looking to do almost like 1,500 crores of sales.
That's correct.
Right.
So maybe around 1,200 crores from this new launch inventory and around 300 crores from the sustenance inventory.
So you're in second half targeting over and above the first half, about 1,500, including 1,200 of new and 300 of sustenance sales.
That's correct.
Okay, thanks. So that was helpful. The second question is on business development. So now large part of the pipeline you said is already like, so all these 7,000 which you said, 7,500, all approvals are in place right now, right?
Yes. Most of the approvals are already in place for this 7,000 crores worth inventory. The key approval is the environment clearance. So we have received the environmental clearances for all projects except Pimpri Nilak.
After EC comes in, typically how much time do you think the balance approvals will take before you go to launch?
So post EC, it is a journey of maximum 45 to 60 days.
Okay.
So already we have applied in a couple of projects. We have applied for RERA, and a couple of projects we have applied for local level approval. And so I'm talking about the next few weeks to next few months.
So out of this 4,000 crores,
certainly see, considering so much of projects are getting launched, we so someone asked me, Himanshu asked me in the past, few minutes back. So we are planning our launches accordingly so that we can get maximum traction at the individual project with the same set of internal stakeholders or team.
So how this inventory will be phased forward? So third quarter, you said 4,000 crores which you plan to open. So out of that 4,000, how much will be open in the third quarter and how much in the fourth quarter? So
around 1,500 to 2,000 crores in this quarter itself, and the remaining will be spilled over into next quarter.
Got it, sir. And just on the business development side, since large part of the pipeline is now almost having most of the approvals, a large part of the approval, which is the EC is already done. So over the next 6 months to 12 months, how do you envisage the business development pipeline building out, both in premium and MMR? So if you can just give us that, some sense and color on that.
So currently, at this moment when we are speaking, so around 9 advanced level of deals we are working upon. So out of that, 6 deals are in Pune and 3 deals are in Mumbai. Apart from that, we are working on 1 deal at Bangalore as well. So this will get closed. See, we have, as I mentioned in earlier calls also, we have very stringent due diligence process. But we are confident to close the significant worth inventory, worth new projects in next few quarters. So that is to the tune of 6,000 to 7,000 odd crores. And that is one of the reasons that we have monetized this strategic we have strategically monetized our small portion of land in KOLTE, and we have taken the enabling resolution from the board as well to raise further 200 crores. So that will be deployed for the business development activities. And on top of that, when I was referring to moving sustenance inventory, my sustenance inventory is giving us a good collection to the tune of 80-90% immediately. So that was the intent, so that all these free cash flows can be utilized for to get invested for this new business development opportunities. So we are confident that this much of around 6,000 to 7,000 odd crores worth inventory will be, business development worth we are going to close in next few quarters.
Next few quarters means like next 6 months or 12 months?
Sorry?
So this few quarters means 6 to 12 months, like maximum up to a year, this will be so?
So in next 6 to 12 months.
Yeah. And just to give a ballpark breakup, you said 3 projects in Mumbai, 3 in Pune, and maybe 1 in Bangalore. So what's the distribution of...
Sorry to interrupt. This is the operator. Parikshit, you'll need to adjust your the volume from your audio.
Okay, sure. Just give me a second. I'll just go to the speaker. Yeah, Rahul, so I was asking you, out of the total 6,000 crores, how much is the split between Mumbai, Pune, and Bangalore?
See, Mumbai is 2,000 crores. Pune is around 4,000 crores, and around 500 crores is from Bangalore.
And in terms of capital outlay, so you said 200 crores of enabling resolution is a fundraise. So what will be the total outgo on the land acquisition in this, out of this GDV which you will add? So how much will be the deployment towards land outright, on an outright basis? How much will be JV and JDs?
So on a composite basis, we are expecting a outflow to the tune of 450 to 550 crores.
Okay, so mostly these projects are largely on outright basis, all this 6,000 crores of addition which will happen?
It's a blend of joint venture as well as the structured outright. When I'm referring to structured outright, we generally try to take the tranche payment facility by landowners, so that further tranches can be, we can internally generate the free cash flows from the project itself to the tune of that further tranches.
You are going to do a staggered payment basically.
Yes.
So this is a QIP resolution, or is it the debt limit which you are looking to raise?
This is a debenture resolution.
Okay, debenture. So you're not going to raise any equity. So it's largely, you have headroom on the balance sheet to basically take more debt because the balance sheet debt is very low, right? So got it. So no new dilution, and you can internally fund it partly through the profits and partly from debentures, issuance of debentures.
So we are in a very advanced stage of discussion.
So if I see that this, so between now and next 12 months, there's a very strong launch pipeline, a very strong business development pipeline, so which could result in very significant growth on the pre-sales for the next year.
That's correct.
So how much growth we are expecting for FY24 on pre-sales? That's my last question.
So we are expecting a growth. We are maintaining that growth guideline given earlier of 25 to 30% for this financial year as well as next financial year.
Great, sir. Thank you and wish you all the best, Rahul. Look forward to these additions to our order book. Thank you and all the best.
Thank you, Parikshit.
Thank you. We have the next question from the line of Rajat Sethia from iThought PMS. Please go ahead.
Hi, thanks for the opportunity. So just one question. We were expecting to do deliveries of 3 to 3.5 million square feet in this year, valuing around 1,600 or 1,800 crores. And we were also hoping to do OCF of 700 crores. Do you think with the first H1 that we have done, we will be able to achieve those targets?
Yes, certainly, Rajat. So there are multiple occupations or completion certificates are lined up in Q3 and Q4. So we are confident of achieving that guideline.
Okay, sir. Thank you so much. That was all I had. Thank you.
Thank you. We have the next question from the line of Dhanil Desai from Total Capital. Please go ahead.
Hi, Rohit. Good evening. So the question I have is that if you can give a little bit more granular detail about our launch pipeline. So which of the projects you think will get launched in Q3 and which will flow over into Q4 out of the priority launches and LR both?
Okay. So Baner is certainly going to get launched in Q3. Likewise, KOLTE. These two projects will certainly get launched in Q3. Apart from that, Sukhniwas, we have already received the RERA, so it is getting launched in next 15 days. Golden Table, which is a Mumbai project, will get launched at the last week of Q3 or early of January. And Raga project again will get launched in first week of first half of the January. So at LR, R13, then row houses, R16, R1D, and R10D. All these projects will get launched in Q3 itself.
Okay. Got it. Second question is, so you say that, we have 9 active PD discussions at a pretty advanced stage. But in your experience, typically, what are the showstoppers in terms of once the deal reaches that advanced stage? What are the kind of issues that can crop up, and how do you rate all the deals on some of these showstopper aspects that can kind of throw the deal away?
So Dhanil, see, the major hurdle is the title clearance. Apart from that, see, when we are discussing on the commercial, when I'm talking about we have closed or we are in an advanced stage of discussion on these 9 days. So commercial discussion is already been closed. Now the due diligence happens on the 3 fronts. One is the revenue front. The second is when I'm talking about the revenue, all those title related, the title flow related things. The second is the technical due diligence regarding the various changes in DCR, various changes in the, the possession of the properties there or not. And the third is from the complete technical perspective about the construction technology and that thing. So, but these 3 things are pretty much solvable. The biggest challenge is the title.
Okay.
So for the title, we generally try to do the very detailed, in-depth due diligence. That takes in terms of time, it takes 2 months to 4-5 months for us.
Okay. So generally, title clearance part comes after the commercials are closed and you get into the due diligence mode, and that is how it works, right? So commercials are never a challenge once you reach an advanced stage.
No. When I'm talking about these deals, we have already closed on the commercial part. Now we are discussing on, or rather the information is getting shared on the title and other things.
Okay, got it. And just last one. So I think, for us to reach whatever target of 25-30% growth, and since most of the launches, even in Q3, are going to be towards the end of the Q3, so not much to be sold in the Q3 in that sense. So Q4 has to be pretty large. That is what is the expectation, right?
Dhanil, see, we are confident of bettering our numbers in Q3 as well. And certainly, since all projects will be launched at the launch stage in Q4. Q4 will be a much better quarter as compared to Q3.
Got it. Thanks. That's it from my side. All the best.
Thank you, Dhanil.
Thank you. We have the next question from the line of Alpesh Thakkar from Antique Stock Broking. Please go ahead.
Thank you for taking my question. So my first one is, given interest rate hikes and tech side job losses that are happening, which is one of the key driving aspects of Pune housing market, how do you see the industry demand momentum shaping up going into second half and further into FY24?
So, Alpesh, see, what we believe, yes, we do agree there is a increase in the interest rate, but at the same time, we have to see from the multiple perspective. One is the wage growth that most of the employees have seen, particularly in employees who are working into a consulting as well as the information technology side. So there is a huge amount of wage growth seen in last couple of years. Apart from that, the property prices in last 7-8 years have not gone up more than 15-20%. And if you do the mathematics on these three parameters, property prices, the wage growth and the interest rate, still we are at the best in terms of the affordability. So yes, we do agree people can postpone their decision or they can opt for the maybe a compact house as compared to the earlier, their expectation. But certainly post-COVID demand is very strong and people, as a group we are relying on the end users and end user demand is very strong. And we don't see any deviation in our guideline because of this. And as a plan B, even if the interest rate goes beyond certain limit, maybe if there is a hike by 100 basis points, so we have done the analysis internally, what can be the probable impact and how we can absorb that impact in order to give the fixed rate kind of arrangement to the customer for next 2 years.
Okay. Thanks for the detailed explanation. My second question is, so how much percentage of your home buyers would be, ballpark, would be taking home loans?
So for a MIG product, it is around 70 to 80%, and for the HIG product, 70 to 80%, and even in that, so if the property is of say 100 rupees, people will average loan size will be in the range of 60 to 70. And for the premium project, the average loan size in terms of the value of the property is lesser, maybe a 50%.
Okay, and also, we are one of the real estate developers with a very good balance sheet. So, and also there are, growth opportunities out there that you are looking forward to. So internally, what is the, comfortable gearing ratio that we are okay taking up to, pursue these growth opportunities? And that's it from my side.
So, Alpesh, we have already taken the approvals from board for 0.5 debt to equity ratio. And yes, when we are talking about a new business development deal, we can opt for that kind of approach in the future. So we have the three possibilities. One is the internal accrual. Second is the the arrangement that we have done with the Planet, or there are multiple such partners we do have, and the third is the leveraging, further leveraging.
Got it. That's it from my side. All the best for second half.
And Alpesh, I would like to mention one more thing over here. Since most of our projects will be at the launch stage and will get launched in the first year of the launch, and we are confident of achieving a good volumes. So there will be a significant free operating cash flows, because I'll be spending very less and I'll be collecting high because of the RCC slab. So that will be that will be a very strong internal accrual in next few quarters.
Okay, that's interesting. Yeah. Thanks a lot. Yeah.
Thank you. We have the next question from the line of Rohit Balakrishnan from iThought PMS. Please go ahead.
Hello, am I audible?
Yes.
I'm sorry to interrupt. Mr. Balakrishnan, please could you use the handset?
Okay. Is it better now?
Yes, sir. Thank you. Please go ahead.
Okay. Hi, Rahul. Rahul, I had a couple of questions. So I think we had indicated previously that we wanted to grow both on a reported basis. I mean, our pre-sales numbers would grow around 25-30%. And you said that you're still confident to achieve that in the H2. But even on a reported basis, you had mentioned previously in the calls that given it will be deliveries heavy, we also see strong growth on that side. So, I mean, given 2 quarters have been finished, so just wanted to get your view on that. I mean, do you still stand by the fact that you, even on reported basis, I know reported basis is more backward looking, but just to understand, are there any delays or anything on that side towards deliveries? Just wanted to understand that. That was my first question.
Okay. Rohit, there are occupation certificates lined up in our 3 projects. So that will come in next 3 to 4 months, and which will get recognized in Q3, end of Q3 and Q4, mostly in Q4. And we are confident of achieving around 1,300 to 1,500 crores of top line.
In the next couple of quarters.
Yes. I mean, in this financial year itself.
Okay. So, okay, got it. So this you are saying is the residual revenue, or is it going to be the total top line? Because I think you've done close to...
Total top line. Since in real estate we follow CCM, so it will be a total top line of the inventory wherein we get the OC.
Right. No, I was asking, sir, that the OC that are remaining to be recognized, the revenue that is going to be recognized over the next couple of quarters, that is around 13 to 1,500 crores, or you are saying that the entire year it will be 13 to 1,500 crores, including the quarters that have just gone by?
Incremental top line.
Understood. Sir, the second question was in terms of, I missed, even though I think you explained, we have done a deal with Planet Smart on the KOLTE. So can you just explain that, what we have done? And I could not understand it. My line was not very clear.
Okay. So KOLTE, this is the project in West Pune, at the beginning of Mumbai-Pune Expressway. So we have acquired this ready to launch asset. So we have now organized the product mix, and we are launching this project soon. So this has a potential of around 25 lakh square feet. Out of that, around 6.5 lakh square feet is been sold to this SPV, wherein the Planet is 83% and we are 17%.
Okay. Understood. Fine, sir. And the other question was, sir, in terms of pre-sales this year, assuming we do the growth, what would be the mix of Bombay versus, Bombay, Bangalore, and Pune, roughly? I mean, you've held around 25%. Do you think this will be continuing?
So Bombay currently in H1 is 27%. Since there will be since there are launches lined up of Sukhnivas and Golden Pebble in Mumbai, so we are confident of achieving 30 to 32% coming from Mumbai and Bangalore, and rest will be from Pune and Life Republic.
Understood. Fine, sir. All the very best for the remaining months. Thank you, sir.
Thank you.
Thank you. We have the next question from the line of Shreyans Mehta from Equirus. Please go ahead.
Thanks for the follow-up. Sir, I was just referring to your previous presentation wherein, we had lined up a plotted development in the LR project, wherein, in this presentation it has been removed. So any particular reason for it?
No, if we have seen the LR presentation, we have added the row houses.
Right.
So we are confident that we'll be getting a good response in our row houses, and the per acre realization in row houses is much better as compared to a plotted development. Hence, we are simultaneously taking the approvals of plotting at township as well. So we have received the environmental clearances for plotting as well at township. But we want to see the the progress in this row house sale. If we get a good response over here, so we'll convert that plotting also into a row house sale for a better cash flow realization.
Got it. Sure. And secondly, the question pertains again to, say for example, if we do 25-30% this year, and we'll be closing anywhere between say around 2,000 to 2,200 odd crores, and again we are talking about 30% growth. So just wanted to understand, for us to achieve that number, we need to have a BD pipeline or a pipeline of roughly around 12,000, 13,000 odd crores, of which some would be coming from the existing phases and inventory. So how would the balance? How do you address the balance?
So Shreyans, if you see, there is a current sustenance inventory of around 1 million square feet. On top of that, we are launching this 11 million square feet. We are taking approval for this around 11 million square feet. So in total, in next 3 to 4 months, we'll be having a sanction of close to 8,500 crores worth inventory. On top of that, when we are discussing about a business development opportunity, simultaneously we are finalizing our plans wherever we are confident of concluding the deal soon. And we are planning to apply to the various authorities, particularly for the environmental clearance, so that by the time we close the deal, that deal or that project will be launch ready. So we are confident. So around 8,500 crores worth inventory. If you see 21, 22 or 2,300 crores pre-sales number this year, maybe around the same set of growth next year, so close to 3,000 and maybe 4,000. So we have given guideline earlier. In next 3 years, we want to achieve a pre-sales number of 8 to 9,000 crores. So that is very much possible through our existing inventory itself. On top of that, we are very aggressively trying to close the business development deals. So that will be, that will make our task pretty easier. And once we have the good amount of inventory, we can command a better price realization. We can come up with a better premium product offering.
Got it. And sir, just if you could highlight, the existing BD pipeline where we are negotiating in case of few major projects and in terms of GDV or potential, anything on that front?
See, out of 6 projects in Pune, around 2 projects are outright. One is structured outright, and rest are joint development projects in Pune as well as in Mumbai.
Got it. And in terms of any number, potential or GDV?
Number, potential, GDV. So GDV 6,000 crores.
Okay, 6,000 crores. Got it.
Yes.
Got it. Thank you. That's it from my side. Thank you.
Thank you. Ladies and gentlemen, if you have a question, you may enter star and 1. We have the next question from the line of Parikshit Kandpal from HDFC Securities. Please go ahead.
Yeah, I know. Thanks for the follow-up.
Mr. Kandpal, I'm sorry to interrupt. Your audio is not clear, sir. If you could use the handset.
Yeah, so my question is, this year, how much is the total area you're looking to deliver in terms of million square feet?
This year, around
FY23.
2.5 to 3 million square feet.
And you said the top line will be, so in the first half we have done 320 crores. So you're saying the second half we'll do about 1,300 to 1,500.
That's correct.
So total for the year it could be anywhere from 1,600 to 1,900 crores revenue.
1,500 to 1,800 crores.
And EBITDA margins here will be like 20% plus, sir, in that range of 20 to 25% on these projects?
Yes.
So, and partly this will come in third quarter and large part will come in fourth quarter, right? So fourth quarter will be very heavy.
Yes. Large part will come in fourth quarter.
Okay, sir. Thank you, sir. That is what I wanted to recheck. Thank you.
Thank you. Participants, if you have a question, you may enter star and 1. To ask a question, you may enter star and 1. As there are no further questions from participants, I now hand the conference over to the management for closing comments. Please go ahead. Management, please go ahead with your closing comments.
Thank you for your participation on this call and your continued support. If you have any further questions, please feel free to reach Dipti Rajput at KPDL. Thank you very much.
Thank you, members of the management. Ladies and gentlemen, on behalf of KOLTE PATIL, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.